By 2025, Bitcoin exchange traded funds, ETFs, are expected to play a transformative role in the cryptocurrency market, bridging the gap between traditional finance and the digital asset ecosystem. ETFs provide a regulated and accessible way for institutional and retail investors to gain exposure to Bitcoin without directly owning or managing the underlying cryptocurrency. Their ease of trading on established stock exchanges and familiar investment structure make them an attractive option for those hesitant to navigate the complexities of crypto wallets, private keys, and exchanges. The introduction of Bitcoin ETFs has the potential to significantly increase liquidity and market stability. By pooling investor funds and tracking Bitcoin's price, ETFs can channel large-scale investments into the crypto market, fostering more consistent demand and mitigating extreme price volatility. Institutional adoption is particularly pivotal, as ETFs offer a compliant and risk-managed avenue for large entities like pension funds, hedge funds, and mutual funds to invest in Bitcoin. This influx of institutional capital could elevate Bitcoin's market maturity and enhance its perception as a legitimate asset class. Furthermore, Bitcoin ETFs could expand accessibility to global investors. In countries where direct cryptocurrency trading faces regulatory hurdles or restrictions, ETFs provide an alternative path to exposure. This accessibility, combined with the trust established by regulated financial products, could accelerate mainstream adoption of Bitcoin and contribute to its status as a global store of value. However, the success of Bitcoin ETFs depends heavily on regulatory clarity. By 2025, the global regulatory landscape for cryptocurrencies will likely shape the structure and operation of ETFs. For example, decisions regarding spot-based versus futures-based ETFs, the custodial mechanisms for underlying assets, and investor protection measures will influence their effectiveness and adoption. Spot-based ETFs, which directly hold Bitcoin, could closely align with market movements, but may face stricter scrutiny compared to futures-based ETFs, which derive their value from contracts rather than direct ownership. Challenges also include potential market manipulation risks and the concentration of Bitcoin holdings among a few large custodians, which could undermine decentralization. Additionally, the performance of Bitcoin ETFs is tied to Bitcoin's price trajectory. Prolonged bear markets or declining public interest in cryptocurrencies could impact ETF growth and returns. Despite these challenges, Bitcoin ETFs represent a pivotal development in integrating Bitcoin into traditional finance. By 2025, their role could redefine how investors perceive and interact with digital assets, further solidifying Bitcoin's presence in the global financial landscape.